Hi, good morning, everybody, and welcome. Thank you for dialing in and getting going with me this morning. We're looking for lots of wind today. I think that's going to be an interesting event. I know I've talked to lots of people over the last 24 hours that are worried about it and actually hunkering down. So it must be much worse than maybe what we're used to. All right, I'm going to jump right in here. I don't have a tremendous amount of fundamental information. There just hasn't been a whole lot. And over the next 2 weeks, I don't expect there to be a whole lot of new fundamental information. So let's kind of review what we have working in these markets. First, let's start with soybeans. We've got incredibly wide soybean crush margins. We have crush numbers out today. I think they come out between now and 8 o'clock. But the expectation is that those will be at or near a record. So crush continues to move. And then from an export standpoint, we're lagging, right? We're still just behind on soybeans. And so there's a lot of debate that says, oh, China's got their fill. They don't need any more. Well, what they've also done in the last this week is put tariffs back on to their hog imports. With the African swine fever or the Asian swine fever and all the stuff that they've dealt with their hog herd over the last several years, what they did in order to control their prices was decrease their import tariffs in order to facilitate imports, right? Well, they've announced that they're going to put those tariffs back on, which means that they're rebuilding their herd and that they're planning to start crushing more soybeans. So I think ultimately that's more bullish for soybean demand than anything, although it's not going to be an immediate factor. So here we are again, yet for another week with the reality that we know that we had a big crop here. We know that we've been lacking export sales, and that we know that we're behind the pace that we want to see. And yet we're still holding this huge level. Let me put the soybean chart up here for you. My computer will respond. There we go. So here's our soybean chart. We're still holding 1250 beans, and we seem to just reject any trade under 1250. And I think that's really significant given the known fundamentals that we currently have. Now, what are we looking for in the future? Well, all eyes are on South America. They planted a tremendous amount of acreage, and so the expectation is that they have a record or near record crop, and that's already in our market. We've known this for a long time, and we've already priced it in. And so what we're seeing is the La Nina pattern strengthen across South America. It continues to roll forward drier. And so the question becomes, how much wiggle room do we really have? And with spreads where they are between basis and the future spreads, the market is telling us that we don't have much, if any, wiggle room in the bean complex. And so any type of perceived weakness can become very explosive. And I think this is a theme across all three of our commodities, corn, wheat, and beans. The perception of the market is that there is tight supply. If you look at the balance sheets across every major producing country, they are tighter than they were 24 and 36 months ago. There has been nothing that has reversed this trend despite record U.S. crops. And I think that's got to just sink in on people, is that the U.S., the most powerful growing country on earth, didn't grow us out of a supply crunch in 1 year. I think that's just absolutely mind-boggling. And so now we have the weather issues that are starting to creep in. And so I think that's why this market is getting kind of jumpy and rejecting anything to the lower side. Now, I'm not saying that Brazil's crop is dead, right? Don't misunderstand me. It's not. In fact, it hasn't gotten into a problem yet because it's just not even it's just not far enough along. But the forecasts are there, And so in this market, I don't think it'll take much for us to accelerate. Because remember, we have not slowed down demand, not at all. And I think that China is more likely than not to continue buying. I think a part of the weakness in the slow pace of exports is because of the hurricane. I think that every day that hurricane slowed those ports down was a compounding effect, and it really bottlenecked us across all of the goods that were trying to come in and leave the country. And so I think we're still feeling the after effects of that. So I think this formation is extremely bullish. I think beans are basing. We've already broken our downtrend line from the summer high, and I think that we are on the verge of exploding higher. So what levels are we watching to prove that that's not true? We're all the way down here at this 1235 to 1220 level. If those levels start to break, I think they'll have to have a catalyst in order to get them down there. But we just don't see any signs of slowing demand or increasing supply anywhere. Okay, let's look at corn. All these lines we drew on here last week. Okay, I want to review what they are. So this is the major downtrend line that was peaked that came from the summer. You just real simple connect the two top lines, and here's your downtrend line. You can see we've been consolidating around it now for about a month. If we work from the low off of this big corrective move, and we snap a channel from this swing low to this swing low, and we put a channel line on the top of the intermediate high, we have what we have here is a base channel. And when we traded up above it, that becomes extremely bullish. So here we've been caught between the upper line of this base channel and this downtrend line for the better part of a month. But every time we dip lower, the market immediately rejects lower prices. And you can see that with all these long lower shadows that we had here for the last 2 weeks. So we said last week that we thought corn was getting ready to get explosive. We said it again on Thursday, and we're going to say it again today. You can see we're peaking up above this trend line here. I expect a test of 595, and honestly, I think unless the weather shifts and changes in South America, March corn will be above 6 again, and probably putting pressure on the 615, 620 level sooner rather than later. Another source of evidence of that is what's happening with the old crop, new crop spread. This is the July minus the December contracts. And so what we saw last week was this spread starting to break out above its cloud, and it's just been on an absolute tear. You've taken it from 24 to 47 in 2.5 weeks, which is an extremely large move for the middle of December on the heels of the largest ever U.S. crop in terms of yield. That's got to just that should just really sink in. That should be a heavy thought, because this market is telling you that the supply is not available to people that need it. And so what we start talking about then is rationing, and we've talked about it for a year, and the need to ration and why the market is so slow to move towards it. Well, it's slow because it's such a violent event, right? Rationing is murder. You're literally killing an industry and removing its profit margin. So that happens fast, and it happens suddenly, and it's an unpleasant process for people to get around. So the market takes that very seriously, which is why we've consolidated for 8 months, sitting right at a level that has not slowed demand down at all. Our basis levels are as strong as I have ever seen them in the 15 years that I've been helping guys market basis. I've never seen anything like it, where you can basically just set your price and people will take it, right? So the cash market is extremely strong. We have not slowed down feeding at all. The basis or the spreads are rallying, and they're getting stronger. And remember, rally cash, which is your basis, then rally the spreads, and then you rally the flat price. And when we've already done basis and the spreads are on a tear and we're getting ready to break a 6-month downtrend line that we've been consolidating on for a month, I think the odds highly favor a massively explosive move coming out of here. So I can't say it any other way than buckle up, because I think the next 90 days are going to be really wild. And that could be exacerbated over the next 3 weeks as we get into light holiday trading, where the volumes typically decline. Remember, we thought that Thanksgiving was going to be a light volume, small range, light volume, and we end up with some of the biggest whipsaws that we've seen in the last year over the Thanksgiving holiday. So I don't think the market's going to take a break. I don't think the traders are going to take it off. I think they're going to trade through it because they understand the significance of this little setup. So that's my drum on corn. I have no interest in selling it whatsoever with spreads and basis doing what they're doing. I don't know what the catalyst is going to be that's going to propel it higher, but I really do think it's coming. And I think we've been patient for a long time on it, and I haven't seen anything that's changed that thought process. All right, so what about wheat, right? Wheat's just had the tar beat out of it for the last 3 weeks, and it has, I mean, it's $1 off of its high. Surely this market's broken, right? And I think if you have that feeling, I really think you need to take your hand and start slamming it in a door until that feeling goes away, because if corn rallies, wheat is not going to crash. There's no new supply available to the market in wheat. If you look globally, the supply is contracting, not expanding. The weather patterns are troublesome. You've got the largest amount of wheat being grown right now, and we are as dry as we've been in a long time in Kansas. One of our guys in Western Kansas told us that he has not received rain since August. Some of his neighbors got a stand, some of his neighbors did not. So the wheat is not in great shape. And wheat is in a situation where we must have a big crop. There's just no wiggle room around it. So I don't think that wheat is a sell here at all. I thought it was maybe up in here, but we've based. I think as long as we're holding where these red dots are, which would be this low, as long as we're holding above about 790 on Kansas City, I have no interest in selling it at all, because I think the upside is powerful. And if it's going to trade in relationship to corn, and so if you look at corn and you look at where it's trading, this is your Kansas City wheat corn spread. So we're trading right at the kind of the mid-level of its historical average. Okay, this is 1985 all the way back here. So we're trading at $2 above corn on the front month spread. It's a normal range. It's not overbought. It's not going to turn around and correct because it can't put itself back into the feed ration. Remember, this was an all-time discount, and what we ended up doing was feeding wheat to ration corn last year, and that muted the corn rally to some extent. Wheat has now taken itself out of the feed ration, and so if corn rallies 40, 50 cents, wheat's not going to break. So I don't have any reservation of saying we're going to hold cash. If we've delivered and you want to re-own, I have no hesitation saying re-own it. I have no hesitation holding those positions, because until something shifts fundamentally, the downside in these markets is just simply limited. All right, last couple things I want to show you are soybean meal. You know, this has been the weak link in the soybean complex for a long time. It just hasn't rallied as significantly, and people have said, oh, you can't trust you can't trust a soybean rally that's being led by bean oil. Well, this one's not. This is the beginning of a new trend in soybean meal. It's just starting to turn, and I think that this trend should continue and will probably come put pressure up on the $400 up on this high sooner rather than later. So I think that that's just further evidence that what we're talking about is accurate. Cotton, this is another big one here in Southwest Kansas because we're talking about acreage wars, right? You're talking about, well, we're going to shift acres around, fertilizer's too high. Well, we don't have any room for any shrinkage and any crop on acreage. We have cotton is tight. All of the minor crops that are grown in the north are tight. Corn is tight. Beans are tight. Wheat is tight. None of these charts are showing doomsday type scenarios where we're going to peak the market and crash it. If anything, they're just simply consolidating before higher moves. And guys, all this talk, this is just straight grain fundamentals. This has nothing to do with inflation whatsoever. I don't think any of this is inflation based in any of these commodities. I think that argument is just completely flawed because our balance sheets are simply too tight. I think if we were trading inflation, corn would already be at $10, which is where it's at in China, by the way. So I don't think that that we've added that component to it. And if we do on a breakout higher, I don't know what I really don't know what will happen. So yes, we're bulled up, but I really think the tone should be more just caution. Just say, hey, just because higher prices are here, that's not a reason to be sold, because there's just too much unknown, and it's a futures market, not a present or past market. And you've got to look out and just say, hey, what room do we have to collapse our supply? What if we shrink acres? Well, we can't. Well, what if we get into a weather problem next year and we only grow a 160 or 165, which by the way is still a top 10 yield? What if that happens? Well, guys, we don't have the supply. We don't have room for it. And there's nowhere else on earth that can outgrow it because we've already factored in huge crops across all of the forecasted production numbers from every other country. So I don't think we're out of the woods yet at all. All right, that was probably too bullish, but I'm just being honest. I think that's the best conclusions that you can draw with today's knowledge. So next week, I'm going to take next week off. We're going to be out of town on vacation with the kids while they're out of school practices. We'll be back the following week, the week between Christmas and New Year's, and we will do a market chat that week. As always, if something does happen while we're gone, we'll have the ability to keep you updated and informed, and we'll certainly have the ability to get positions put on if they're needed. So with that, I hope you guys have a great week. Remember, there is tremendous risk in trading futures and options, and you should only do so in light of your own financial condition and with the help of a professional. I hope you have a great week. We will talk to you 2 weeks from now.